Secrets of the Canadian economic strategy. Canada has become an economic superpower in a very interesting way. But what are the secrets to its steady growth? And how are they still growing where other super economics have plateaued? As Canada is one of the highly developed countries, they have a lot of good economic growth strategies, which they applied recently. At this point, Canada's economy can rival its neighbors. But what are the strategies behind this economic growth? Stay tuned till the end of this video to find out. Hey everyone, welcome back to Countries Economies Explained, and make sure to like and subscribe, and let's get started with the video without further delays. We can say that the economy of Canada is highly developed, mixed market economy because it is the 8th largest GDP by nominal and 15th largest GDP by PPP in the world. Like other developed nations, this country's economy is also dominated by the service industry that employs about 3/4 of Canadians. Canada has the third highest total estimated value of natural resources that was valued at $33.98 trillion in 2019. Along with that, it also has the world's third largest proven oil reserves and is the 4th largest exporter of crude oil. Canada is also the 5th largest exporter of natural gas. Now we are going to discuss an integrated summary of the recent changes in output, consumer prices, and employment of Canada, as it is highly important to understand their current economy. It highlights the changes in the economic data during the second half of 2021 and into early 2022. Like the other countries, an economic downfall due to pandemic situation continues to evolve in Canada. The economic recovery of Canada was strengthened during the second half of 2021, as output rebounded to pre-pandemic levels in the fourth quarter of the previous year. Like business stockpiling, higher export volumes and increases in residential and non-residential investments have contributed to stronger economic activity late in that year, and now it is also running as they expect the recovery and growth of these sectors. The unemployment and labor underutilization trended down toward pre-pandemic levels when the employment rose markedly during the second half. The labor shortages, the rising input costs continue to cloud the business outlook. But the headline consumer inflation accelerated in the second half and surpassed the 5% mark in early 2022, for the first time in over 30 years, which is a very big achievement for their economic growth. The strong vaccination uptake and the reopening of the economy helped Canada to rebound from the pandemic slowdown because in the OECD's latest figures, Canada's economy grew by 4.8% in 2021, but it remained lower than OECD's and global averages of 5.3% and 5.6% respectively. So the targeted government support programs boosted household incomes and enabled the business recovery, providing stability and resiliency to their economy. However, inflationary pressure, new virus variants, and an uneven sectorial recovery posed the ongoing short and medium-term challenges to the regrowth of their economy. But now the fiscal stimulus measures and growth in the United States, which is Canada's largest trade partner, could help to boost their export-oriented industries that are a core component of their national economy. In these rebuilding processes to help break through the barriers facing SMEs in a dynamic and increasingly protectionist economy. Sonia Shorey, Invest Ottawa's Vice President of Strategy, says Canada must foster increased collaboration with stakeholders on the ground in international markets. This is critical to help SMEs more easily access new partners, investors, customers, and related commercial opportunities in an ever-changing global economy, Shorey added. SMEs would then be in a better position to build key relationships, deploy their products, and showcase market adoption to attract investment and generate new global revenues that help build the Canadian economy. From the given fundamental shifts, which is expected as the fourth industrial revolution, Canada keeps a pace with technological change to successfully compete in a winner-take-all economy that requires upskilling the workforce and developing solutions for tomorrow's economy. So in the Clean Energy Canada and Navius Research's latest report stated that the clean energy sector is projected to grow by almost 50% and employ 639,200 people under the federal government's new climate plan by 2030, which is a significant portion of the growth in jobs that is forecasted in clean transportation, with the number of employees are expected to reach 364,000, out of which 184,000 are said to be in electric vehicle EV technology alone because the trend to electrify the transportation sector grows globally. The International Energy Agency, IEA, and Bloomberg have both noted strong uptake in EV technology among Canada's trade partners, namely the European Union and the United States. However, for Canada to take advantage of the opportunities which lie ahead, and they planned to scale up the clean energy sector quickly and integrate its solution within the economy that remains a problem because the companies cannot gauge their full environmental benefits and potential for financial returns until the technology is at a large enough commercial stage, and the government look to overcome the hurdles of scaling up for the clean energy sector, also constrain their expansion into foreign markets because potential buyers are looking for the existing commercial usage in Canada. The growing usage of EVs and the demand for lithium-ion batteries in the coming years, which to grow Canada's economy as the government planning to form a globally competitive EV industry, which leverages an established history of automaking to manufacture EVs for local and international markets. The real gross domestic product of Canada rose 1.6% in the fourth quarter, after advancing 1.3% in the third. Inventory buildups in Canada contributed substantially to the growth in the early 2022 as stockpiles rose in manufacturing and wholesaling. In Canada, the trade volumes ramped up in 2022 as exports and imports posted their largest quarterly increases since the economy emerged from the initial lockdowns, and the total export rose 3.2% in the fourth quarter, up from 1.7% in the third. Goods exports rose 2.5%, led by higher shipments of motor vehicles and parts, which is their strategy to uplift their economy. To help these bottlenecks which are faced by the industries of Canada, they started quickly to resolve a few important areas, like existing regulatory obstacles and skills shortages to enable the uptake and development of clean energy solutions within their country. In addition, to improve commercial adoption, the government procurement of Canadian clean tech solutions, which are exercised within WTO rules, which will be extremely beneficial for the sector. It is stated to help the Canadian companies to provide a customer reference point which can be used to showcase domestic uptake and, importantly, reduce investment risk to access capitals from VCs and debt financing institutions. That is a crucial element required by companies to scale up and build competitive products to create new jobs. Tremblay, President and CEO at Invest Ottawa, pointed out, Canada will need to leverage regional and sectoral expertise, particularly in life sciences, smart mobility, digital technology, clean energy, and advanced manufacturing in building an ecosystem that brings together policymakers, commercial and post-secondary partners to improve collaboration and knowledge sharing within the economy. Tremblay also noticed that the Ottawa Hospital's partnership with the Sheba Medical Center, Israel, Area XO, and its CAV Talent Catalyst program has brought in best practices to address healthcare challenges and improve innovation in smart mobility by strengthening the global and regional collaborations, which help Canadian companies to develop cutting-edge solutions, Tremblay said. Canada will become an attractive place for investment that creates skilled jobs and growth in the economy. According to Michael Tremblay, that given the significant contribution, 50% of small and medium-sized enterprises, SMEs, to Canada's GDP, and along with being export-oriented and a source of innovation within the economy that enables these SMEs to access global markets where they can commercialize at large scale, that would help to attract investment into the economy of Canada. However, despite their critical role within Canada's economy, only 11.7% of SMEs export their goods and services because of the ongoing challenges that the government faces to identify and pursue new business opportunities in the international markets. The OECD has forecasted that, in 2022, Canada's economy will expand by 3.8% compared to last year, which expansion is expected to be lower than the global average of 4.5%, but on par with the OECD average despite these recovery signals. Canada continues to face lingering pre-pandemic structural issues that is related to inclusive growth, energy transition, and healthcare. But the fallout from the COVID-19 crisis negatively affected Canada's fiscal balance, with the federal government's debt-to-GDP ratio rising from 31.2% in 2019 to 20, 50.7% in 2022 to 23, that is requiring at least in the medium run a clear roadmap for managing debt to the head-off risks to fiscal sustainability and to the reassure markets. These are all information of the Canadian economic strategies that Canada is following right now after this pandemic situation. Now, if you found the video informative, then don't forget to like and subscribe to the channel and press the bell icon to never miss any update, and comment your thoughts about these strategies, if it is good or bad, and what else you think they need to change. This was it for today. See you soon with the next one. Until then, Peace out.